In this presentation, we will consider the calculation of Medicare payroll taxes within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our practice payroll file. You can follow along with your own business file, or you can use the free file provided by QuickBooks for a sample file by searching through your browser for QuickBooks Online Test Drive. We're going to go down to the Workers tab. Within the Workers tab, we're going to scroll down to our 3 employees, and note that as we set up the Medicare taxes, it will typically be set up by default in terms of the accounts that will be used, and the calculations for Medicare taxes are fairly straightforward. In other words, the calculation for Medicare is going to be more of a flat tax as opposed to federal income taxes, which is going to use a progressive tax system. So it's typically pretty easy to calculate the Medicare, although there could be bonus Medicare taxes that are paid over and above an increase in essence to Medicare taxes for earners that have a high income. So in other words, if we were to see our employees and see Anthony and Beth, we would consider their Medicare was going to be pretty standard for the whole year, not much of a problem, flat tax to calculate it, and so no problem. Although there is an employee and employer portion which adds a bit of complication as compared to other types of taxes which may only have an employee or employer portion. For example, FIT only has the employee portion, federal income tax, as opposed to Medicare, which, like Social Security, will have an employer and employee portion. However, if we see someone like Judy Jones, we're going to say, okay, the income is going to be high, so it's quite possible that at some point in time we're going to hit an area where we're going to have to increase the taxes on it. So the taxable earnings for Medicare will be much the same, but we'll have to differentiate the type of calculation for those earnings to add on some added taxes after they've reached a certain point. We'll see an example of that as we go, but we'll note that when we look at the 941. So there'll be a change, and we got to recognize when that change happens and say, the taxes are slightly different. We may not even notice it because it's not going to be a big change or a big amount compared to their paycheck. However, it'll make a big difference in the look of the 941s when we try to compare from quarter to quarter once that happens. And of course, that's going to happen when you have employees that make a substantial amount of money that will then qualify for that bonus Medicare option. To consider these, let's take a look at some paychecks by going to the Accounting tab on the left. And then we're going to go to our chart of accounts is the tab we're on. We're going to take a look at the checking account. This is where we have our payroll. If you have your payroll in some other account, then you can go to the payroll account. These are all paychecks for us. That's what we're considering here. We're looking into the paychecks. We will consider this paycheck for Judy Jones, where she's making a substantial amount here because there's a bonus included in this paycheck as well. This is going to be our owner, and we'll compare that to Beth and Anthony, who are going to be our salaried employees. Let's first look at Anthony, who's going to have more of a standard calculation for the Medicare, and then compare that to Judy. So we'll go up top and we will edit this item. This will take us out of the register and basically jump us over to the payroll area where we have the payroll data input screen. We have the hours times the rate, which will in essence give us the gross pay of $4,062.50. Then we have the employee taxes, what was taken out for the employees. We have the federal income tax, Social Security, and Medicare. So Medicare is what we are concentrating on here. Now the calculation should be fairly straightforward. 4062.5 gross pay times the rate 0.0145. And that should give us the 5890 rounded. So it's 5890 about. So note the straightforward nature of that as compared to the federal income tax where we had to use the table. So this in essence is not really the complicated item. This is not really what we're paying QuickBooks for to calculate the withholdings. However, in order to group this information and in order to deal with the cap that may be applicable to some areas, and once we start to combine all these laws, that's what we start to need QuickBooks to compile this data for. That's what we're really paying for in the paid payroll. The actual calculation right now in standard for most people for Medicare is something that's not difficult to calculate and something that we can easily check and verify. As time goes by, note that it might be the case that the rate will change, but typically we'll have more of a flat type rate and it'll be somewhat more standardized as opposed to the federal income tax, which as long as it's a progressive tax, will be more difficult for us to manually calculate, to think about how that number came about without going through a few more tedious type steps from a manual basis. Then we'll see down below, of course, we have the employer side, which includes the Medicare, same amount, similar to the Social Security. This is the amount we're paying over and above. So remember that difference. Up top, this Medicare amount is paid, obligated by the employee. The employee is obligated to pay this amount. This is coming out, this is being paid from the employee. It just so happens that we as the employer are required to force them to comply with their obligation to pay. So instead of us paying them and then they pay their obligation, we're required to take the money directly from them and pay it. But in theory, it's their money that they're paying. Down here, on the other hand, this is our payroll tax, even though it's calculated based on the employee pay, which is kind of funny. We're paying taxes based on earnings that aren't ours. They're earnings of the employee, but we have to pay over and above what they earned. That's what we call payroll taxes from an employer standpoint. Now let's go back up, and I'm going to close this one out, and we'll go back to Judy Jones. So I'm going to go back to the accounting on the left side. We're going to go to our chart of accounts. We want to take a look at the checking account again. And we want to look at Judy Jones. Now we have this large check for Judy Jones. If we edit that check, we're going to see the detail for this one. This is the only difference here being that this is going to be a substantial difference, of course, in the earnings, where Judy may have gone over, of course, the cap and therefore have to pay more than the standard rate. And that's where we have to be kind of careful. So for example, if we were to take this 241,666.67 times 0.01 times 0.0145, we'll see that the Medicare calculation here is going to be above that. So it's not going to be a straightforward calculation once we're over and above that cap. We're going to have to think about the bonus, basically, Medicare that will have to be calculated. Now, that is something that it's nice to pay QuickBooks for, to see when that cap is reached, to make that added calculation, because the fact that it could differ from paycheck to paycheck when that bonus depreciation kicks in is fairly difficult, even though the concept as a whole is not that difficult. You got to make sure that you hit it at the right payroll time period and note the amount that's going to be in that bonus time and calculate that. So that's going to be something that QuickBooks can do for us. We want to be aware of it so that if someone asks us, why did my paycheck differ from month to month when my salary is the same or something like that? Why is my net check? We have some concept and how to go about thinking about that, figuring out what is going on. And we'll see that as well as the form on the Form 941. So I'm going to close this one back out and we'll take a look at the forms now. So if we go to the reports on the left side, we'll take a look at the balance sheet report, and we'll run this report at 01/01/19 to 12/31/19 for 2019 and run that report. All this information is payroll related. The liability from what we withheld from the employee and the employer portion of Medicare taxes is in this number. This account was set up by default by QuickBooks. This is the liability account that they set up, and this is the amount or the item that's going to be applied to for both the employer and employee portion, the amount we took for the employee and the amount that we had to pay over and above that we have not yet paid to the government. So therefore it's a liability, current liability, as you can see here, that we're going to owe in the future. If we wanted to change this account, if we just want to change the account name, we can go to the chart of accounts and just change the name. If we want to make some other account for it to be applied to, we would have to go to the preferences up top. If we want to apply out the grouping of the liabilities in some different format. We took a look at those options with regard to FIT and with regard to Social Security. They'll be much the same. So I won't go into that again, but you go into the cog up here, your company files, and they go into payroll settings. And then you could take a look at a prior presentation for FIT and Social Security to go from there. Now let's take a look at the income statement. I'm going to do this by right-clicking on this tab up top, duplicating it, and then we'll pull the one from the left to the right. So now we have the balance sheet on the left, new tab on the right. We're going to go to reports down below. We're going to take a look at the profit and loss or the income statement. The dates 01/01/19, 12/31/19, and run that report. And if we scroll down, then we note that we have wages as the default that QuickBooks will set up, and taxes, which are in essence payroll taxes. So if we go to wages down here, we'll see that all these checks are the same for Anthony and Beth. They had the same earnings. This is the gross pay. The amount for the Medicare is included in these gross pay as it is for Social Security. We didn't break it out. If the expenses here, even though we gave them a check that is less than this amount, because the amount that we took from them, which we call withholdings, is still their money, which we call payroll expense, not payroll taxes expense. It's payroll expense. It's just their money that they owe that we are giving to someone else on their behalf. If we go back up top, back to our reports, the taxes side then, if we go into payroll taxes, will include the employer portion of Medicare, the amount that we had to pay over and above the gross pay. That's what we as the employer call payroll taxes, the amount that we have to pay over and above the earnings of the employee based on their wages. So we have to pay this over and above their gross pay. So then if we go back to our report, those are going to be the major two items. Again, if you wanted to group these somewhat differently, have multiple kind of areas where you group the taxes or something like that, have different, then you could do so. You could look into that, at least within the cog setting up top, and change these accounts. If you wanted to call this account differently or group both of these items that relate to Medicare and wages to one expense account to simplify it, you could look into the account settings over here, changing the accounts and the cogs up top. Those are where those options would be. I'm going to make another tab up top. We'll right click on this tab and consider some forms. Duplicate this tab. We're going to pull this to the right, and then we're going to go to the taxes tab on the left. We want to go to the payroll taxes. We're going to consider the quarterly forms. So selecting the quarterly forms, selecting the form 941. This is where Medicare would be calculated. First quarter, first 3 months. We'll preview that first 3-month time period. And this is where QuickBooks does a great job of this is what we're paying for here, for them to basically group this stuff together for us. And you'll see down here, Medicare is being grouped for that first quarter. And the Medicare wages are different than the Social Security wages, which are different from the federal income tax. That's because we had those large earners and some other kind of benefits that are making those differences. Huge benefit that QuickBooks tells us what those are, because once we get into those differences, it starts to get confusing. And notice also now we have this 5D, which we would only see if we had a large earner that went over the cap, so that we had now the additional Medicare tax withholding, right? So now we have to have the Medicare wages times the rate plus the additional Medicare that we have to withhold. Also note that the Medicare on this form is being calculated with a rate that you might not recognize, right? We have the 307,408.34. That's Medicare wages for all employees for that quarter times 0.029. Okay, so what is this 0.029? Well, the 0.029 divided by 2 is that 0.0145, what we took from the employee, meaning this is the employee or employer half. This is combining both employee and employer portion. In other words, the 941 will include both the employee and employer portion of Medicare. So if we close that back out, and we're going to go back then up top, we'll go back to our payroll information, going to go back to the payroll tax center. Then we want to take a look at the annual forms. So we'll take a look at the annual forms and consider the W-3. So if we consider the W-3 and then view the W-3, we'll see the data for the entire year on the W-3. And this is just the employee withholding. So here's the Medicare. Once again, it should be summed up. All 4 quarters of 941s should usually generally add up to the W-3 form in box 5. Notice the Medicare wages are going to be closest to actual compensation. It's the highest number between Social Security and federal income tax. This federal income tax up top, not usually the best calculation or thought of what actually was earned, because it's only being used to calculate federal income tax, and some things have been removed, such as the 401k, whereas the Medicare is typically the largest number and therefore closest to actual compensation, although there could be things such as a 401k matching and other benefits that are not included in this number. So our actual earnings in terms of what value we're actually getting isn't necessarily even reflected in this number. And we also note that it's not as straightforward a calculation here. It should only be, this number over here should only be the employee portion. So normally it would be the 319,420.84 times 0.0145. And that would normally be this number. However, you'll note it's not twice this number because, so it doesn't include the employer and employee portion, but there's that bonus calculation, that bonus Medicare that's involved here, which we cannot easily see. So now the W-3, in other words, is going to be more complicated if we have an earner who's earned over that threshold, because we can't just have a straight flat tax anymore. We've got that problem. That's one of the things we pay QuickBooks for, but again, you want to just be aware of that, or else you're going to look at this and you won't be able to kind of figure it out. If anybody asks questions about, where does that number come from on their W-2, then usually it's pretty straightforward, because it only happens when you have the earner that's going to be over that amount on their particular W-2 that you're going to have that issue, and you want to be aware of it so you can just basically answer any questions and, have comfort of mind that you have some idea of how these things are all being tied together and formatted and calculated. For more accounting information and accounting courses, visit our website at accountinginstruction.info.